Welcome to TradeTheNBI.com. This is John. This report is for, it's the end of the world, of course. It's December 21, and it's all going by the wayside, so I probably didn't need to bother with it. I guess that means I shouldn't have even gone. I had the second part of my root canal for my tooth, and it was not fun, but I didn't even think about the end of the world. I should have held off for another couple of days, but I know I just kind of joke with that, but it's for some still serious issue, and that's fine. It always causes panic, and whenever there's panic, you're going to see potential for increase in volatility. We didn't quite get enough of a dip to satisfy our red dot short, and that's kind of a bummer because I like to get these things cleared out of the way before, moving on to, more positive things. The only other thing that's alarming to me is I'm watching this dramatic move straight from the bottom, and if it goes back up to my top, we end up with one of those lovely potential ratio size short signals. So, I've been saying how, calm things have been, and for the most part they are, but then, it's like, boom, all of a sudden you get these little duplex of readings, and you're sort of a little bit less enthusiastic is the best way. It's not panic, it's just you're less enthusiastic. And we did get a lower shakeout reading, even though you ended up with the higher read, that coming off two positive extremes. I worry about, this very kind of setup. So we'll keep an eye on it. We're very conservative right now, so nothing for us to be overly panicked by. Somewhere in the middle, just keeps bouncing around back in here. Fine, nothing we can do about it. Back to the upside of the Bollinger Band, and again, the gray dot. If we were looking for the low retest, yeah, it did. Okay, the gray dot worked out, so that from that standpoint. Oh, and what do we got here? 123 into 270. Let's do that right now. Since I'm a little behind, I'll go a little quicker. Alright, so that's nothing to be overly concerned about in the sense of shorts adding in. In fact, it kind of reflects a little bit of complacency as we've been seeing this overall buildup. But I think you just had a large number of year-end buyers coming into the overall setup, looking for any kind of discount they could get and taking it. And you're probably going to see an increase in volatility as we get closer to Christmas because you have fewer traders, and it makes it a lot easier to move things around. The other thing that started to weigh on me again, and I mentioned it the other day, my computer hasn't changed in that range from the 452, but I expected the 1409 to be higher. And the fact that it didn't move higher tells me that the computer is seeing some subset data in there that has it holding back from move. I don't know what these adjustments are. I just get the numbers and I move them up and down, and we give the magenta and then the white for our general stop. So, there are enough concerns that we just, still play it cautious. And, is it ever perfect? No, but there are times where we know that we can jump on a scenario, and we had a few of them, and we've taken those. And other times you just have to kind of say, okay, well, let's let it unfold a little bit because, this is perfect for it because, people said to me, well, John, it's just not worth it for me to sell 60 puts because it's too far away. I want to sell 61s. And I'm like, yeah, but here's the problem with that. Yeah, we dipped below the red line here, so we know that 61 is a likely target for any retrace. We were still expecting, even when this day closed, a little bit further lower. And again, we had the positive extremes back over here that potentially get retested down at the 60-30. So no, I didn't want us to have a situation where we're selling a put or telling someone to buy when it dips down, because those are likely retraces, and if I'm telling you 61 for a range, it's a little bit too much. So there's a little bit of that logic behind it, so you get an idea and understanding of why we just didn't run out, because yes, we recognize that that's oversold, but while we are looking for a pop, there's nothing wrong with taking a modest gain. If we go to the website, we can take a look at that real quick. Click the home video. I thought I'd point out this one too. I put this link in here. This is when I do little intraday live broadcasts, and you can just click that link and it takes you there. And when our channel's going, and if the channel's not going, you can always click any video that I've done already to do that. And then, of course, the notes for the world ending right here. And again, it's just like I was reflecting here. We're just modestly trading the overall setup. But we wanted to look at SSO while we were here. Oh yeah, and that's all the most recent videos going back. Let's click the SSO and we'll take a look at it real fast. And we can see, best I could get was around 20 cents a couple of times, was right at that. Is that a huge amount? No. But again, we're playing with the small portfolio, and I expect that people with larger ones are going to be proportional to our overall concept. And so, if you're trading 3 times the account, you're going to have 3 times the number of contracts with it. Proportionally, is it still a small amount? Yeah, but that's all we've been doing for the most of the year, is collecting our small amounts as they go, and that's just what responsible trading, as well as effective, because over time you outperform the general market. And so yeah, we missed this little up move. If we had sold the 61s, we would have had a little bit more premium. It's okay. I'm not going to object to oh wow, I just noticed that one. Futures took a massive decline. Wow. I'm going to slide that one in there. I just happened to notice that. Look at that. Wow. That's crazy. That's live action. And that happened after hours close. So there you go. Okay, well, 17-point move. That would take and retrace this complete positive extreme there. So, but that happened after the close because I'm seeing no reflection whatsoever. And I think I actually had, well, let's check it out just for the heck of it. I actually put in some buy setup. Yeah, I did. Just ridiculously low. Sometimes I'll put them in there like that. And sure enough, so I'm already long contracts into that move. And I actually had buys further down. Did not get filled on that setup. So, oh yeah. Anyway, that happens. Go figure. So that's interesting. We'll see if that evens out. There's got to be some kind of news on that. Let me look real fast while I'm flipping to our next chart. Oh, okay, I see. Congress adjourned. Yeah, and that's a political kind of setup, but you can see how something like that in the futures can, wipe out a move really quick. Though it does satisfy the red dot from the futures, so hey, that actually could be a potential positive from that standpoint. We had sold 32s on USO. We're going to let those shares get called away if it still stays above there, and it'll still leave us a small portion. So again, that'll be a nice return for our holiday. We can go ahead and take a look and see exactly what that number was. This time I'll go to the portfolio. It's always good to show that so people know. So for USO, 32, yeah, we got almost 40 cents. So that's equivalent to selling at 32.40, and our cost basis down at 28.70. Nice return. Nice return. No objection to that whatsoever. CLF, we had sold 34s, got almost 80 cents plus for them, right around there. So that could go either way, particularly if the market's down that much by tomorrow. That'll be interesting because we could end up keeping those at 34 and collecting that premium. But we're still not going to buy them back even if we move below or somewhere in between the call strike. But if you want to hold on to them that way. And the reason being is we knew we were overbought right there. So just so that you understand. Same thing with our X position. We'd sold the 24s, got like 40 something. So it actually came pretty close to this. So who knows, depending on if I don't think a down day actually hurts us at all. I mean, in fact, I think it would be something that would cause us to be interested in the setup. Now, with the orange dot, we wanted to sell our puts on WLT. So let's go ahead and take a look at WLT right there at the bottom. Sliding up WLT, we got 48 cents. The debate was, now if we dip below 35 at the open or whatever, then instead of 35s for selling for next week, I'd like to sell, I think it's a 32.50 would be the next step down. So if we get a significant decline for our open on WLT, then yeah, we'll definitely want to do the same because we'll be getting 300 shares and then we'll want to sell 32.50s for another 3. Looking for a turn. I'd love to see this dip down the extreme, dip down below the blue line, as that would be positive. But we'll have to see how it plays out, and then be fine to get back in. So here's the ES, and look at that decline. So red short number with the gray dot, not only did it retrace that low, took out that 1423 that we were expecting price to dip to, and so now that's taken care of overall without any question whatsoever. And that, look at that. I mean, that's kind of mean, because in a sense what they did was they just wiped out all the people who had been entering along here, and then they set their stops just below the lows right there. Sure enough, comes down, hits that, and then boom, shoots right back up. So they're going to see that they got stopped out, big loss, and or broke even depending on where they got in, and then boom, all of a sudden price is 3/4 of the way. However, when you get these kind of moves, I typically tend to expect that those lows get retraced during normal market hours. So even if we do close back up higher, it's possible that we could see that happen during the day. Maybe it was a knee-jerk reaction, maybe not. We'll have to see. What I was going to point out was interesting, because I was getting attracted to a setup for if we retraced that full amount on the ES. But now, having seen this, I don't know that I'll give that out as a trade, because I was going to suggest that if we dip down below that, and that's why I put in my orders, if price dipped below, that it would want to catch it on the way back up, because then the Starhawk right here would be an effective trade. Now this one is a slightly modified version. I can show you what the performance report is. Look at that. And this is going back 2009 and 130 plus trades. So almost 100, actually 140 even. 5.29 profit factor. Look at the performance on that. Excellent. And even the annual returns from a month. Now, of course, the December showing that it took a beating on that trade, because that's going to record it as a loss from that setup. But I was getting attracted because that's going to meet. It's effectively getting a discount in green trend. I mean, hello, that's one of those things that we look for. But beyond that, also look for a special offer on dot alerts for those of you who don't have indicators or trial member, and you're looking to potentially capture. If we get a decent little decline there, it could be worth having those. I'm offering a nice little special where you'll be able to get all the different stocks at one unique price, but you're only going to get the offer through our email. So take a look at that, and as always, though, look for me on StockTwits Twitter. Trade well.